Gamonad, and welcome back to the pipeline. Super pumped for this episode. We have Philip here, founder of Elixir Protocol, and also joined by Kevin, aka @intern, the co-host. He's back. Super pumped to be here. Thanks for coming on, Philip. Really appreciate it.
Thank you guys for having me.
Awesome. So I know there's been a lot of synergy between the Monad community and the Elixir community, particularly over this past year. Elixir obviously being some of the earliest builders within the Monad ecosystem, which is great to see. But would love if you could give a little bit of a rundown, little background on yourself personally. What's your story? How did you end up founding Elixir? Would love to hear.
Awesome. So yeah, happy to dive in. Real quick on my background. So I got into crypto back in 2016 when I started the Carnegie Mellon blockchain group. I was the president there until I graduated from CMU. I ran a company called Block Venture for a little over roughly 2 to 3 years, up until around 2 years or so when I saw the opportunity for Elixir and decided to go full time on it. While at Block Venture, we're coming across 4 or 5 blockchain startups a day. All of these guys needed a market maker for their centralized exchange pairs. As we started talking to order book based exchanges, we realized they were also courting the same 4 or 5 names for market making services. And even concentrated liquidity AMMs, they were courting the same 4 or 5 names, right? So we saw that token projects need this, order book based decentralized exchanges need this, as well as on concentrated liquidity AMMs. They're kind of all being held back by the fact that they have to go through one of these few centralized names. And we got closer to these market making firms and realized that market making in crypto is just fundamentally different from market making in traditional finance. In traditional finance, the actual P&Ls of these firms is the main profit center. So what they make in the market is what they take home. In crypto, that's not the case. A lot of times these guys are just doing very basic, when we talk to these guys, they're running Hummingbot scripts essentially to deploy liquidity on the order books. And when we talked to them about it, they were telling us that the actual profit center doesn't actually lie in the actual performance of the algorithms. They're generally break even. Where they make their money is charging these exchanges and protocols access to this market making. So I went to Cole, who's Cole0x on Twitter. You guys might have seen him too. And I was like, look, there really is no reason a decentralized trustless protocol couldn't do the same thing. So that was the inspiration behind Elixir. And so Elixir is building a modular DPoS network to power order book liquidity, allowing anyone to supply liquidity to order books. So when supplied liquidity, the protocol will algorithmically build and deploy that liquidity on the order books, tightening up the bid-ask spread, building up the order books, and deepening the actual liquidity on that pair. It's very similar to Uniswap in that we actually run the Uniswap V2 equivalent for order books. So the actual LPs who supply liquidity to a pair have a near identical risk return profile. And that's by design, right? We think that market making is a very complicated space, and we've actually tried to stay away from that quite a bit. So now anyone can actually supply liquidity to these order books. And from the exchange side, right, these guys are all paying out $1 million plus per month in these long-term liquidity provider incentive programs. And it just goes to 2 or 3 big firms. So now we essentially allow for them to integrate our protocol to actually allow for their end users to supply liquidity to their order books and earn a share of these incentives that they're already paying out, right? So essentially freeing this market for order book liquidity. And so we have native integrations lined up with Vertex, right, via Vertex Fusion. We have DYDX, we have RabbitX Fusion launching next week. We have Injective, Bluefin, Orderly, Hyperliquid, Avo, right? Essentially, most of the large perp dexes at this stage are natively integrating Elixir into their infrastructure to actually allow for their end users to supply liquidity to the pairs in a trustless manner. And so, we power roughly 30% or so of the order book liquidity on Vertex. And the last thing I'll mention just around kind of our future plans here as we roll out these integrations, we're planning on, so we power roughly 30% of the order book liquidity on Vertex. We're going to be powering, more than half of the order book liquidity on RabbitX. 30% on 40% on Bluefin, 30% on Orderly, right? Whatever, half the order book liquidity on Hyperliquid, right? So like as we continue to roll out across the space and allow for anyone to supply to these pairs, Elixir is going to be emerging as this like underlying like crucial infrastructure that these exchanges can lean on to bootstrap liquidity to their order books. So I'll pause there. That's my background. That's the high level of Elixir, the problem we're trying to solve, but happy to dive into any questions.
Awesome. Yeah. Thank you, Phil. I think there's been a ton of excitement, right? I think when you guys initially started to do some work with Vertex, right? And then you go like you can basically point it out on the chart of like traction volume. It's like before Elixir and then after Elixir. And there was just like a massive increase um, in the efficiency of the protocol, right? In traction and volume, all these things that protocols are actually building for. So have definitely seen a lot of success. I would one question, right? I think that people are like the average crypto listener, right? They understand in AMM, right? They're like, all right, I'm going to put in, this token and then the other pair. And then when people trade against it, right? Like hopefully I collect fees or I might get blown out on one side. But they generally understand, okay, in AMM, I put in both sides. I think they see like market makers, like some of the big players in the space, right? They're like, okay, they're constantly quoting prices, but it's different from an AMM. Um, would I guess my question would be like, if you're explaining to someone who wants to deposit into Elixir, um, what is it like a very similar to an AMM experience where you're depositing in and then you guys are actually doing the work on the back end to quote, or how should they think about it when they're thinking about depositing into Elixir?
Yeah, it's a good question. It's very similar to an AMM in that regard. And you're exactly right that the protocol actually provisions that liquidity on the back end, right? So our protocol comes to consensus once a second. We have fraud proofs posted on Ethereum mainnet, and essentially we pull the state of the order book. Our validators come to consensus, and then they send that off to our relay infrastructure, which does the signing and then sends it off to the exchange. So that process is fully trustless, right? So you can see the code, you can see exactly how your liquidity is going to be provisioned, right? And you know that like it's not just me and Cole or Chris or any of the other guys on the team running around with like API keys or whatever, right? Like at the end of the day, it's fully non-custodial, it's fully trustless. The signing actually happens at the smart contract level, right? So we don't actually have access to the funds at any given time. They sit in a smart contract, and then we issue signatures based on the funds held in that smart contract. So yeah, for an LP who's supplying to Vertex Fusion, it's a trustless way to supply liquidity to order books, right? Because that's like the whole vision that Elixir is trying to solve. There is no trustless way to bootstrap for an order book to bootstrap liquidity. It doesn't exist right now, and so we want to be that. And so that's kind of like a big. That's really where we've seen a lot of our traction. We actually started out going the centralized exchange market making route. And then we had DYDX reach out to us. We had all these other large exchanges reach out to us, and we're like, look, like we're paying out $3 million a month in liquidity provider incentives. Like we'd love for anyone to be able to access this, right? And so, essentially we quote. It's like 4 or 5 orders on each side, right? And then we update those once a second. And then the users are essentially they have a reward APR, just like if they supply liquidity to Uniswap. And it's very similar in that like most people will supply liquidity to a Uniswap pool, not for the actual risk return kind of the actual underlying algorithm, right? When you supply liquidity to a Uniswap pair, it's generally like sometimes you make money, sometimes you don't, right? It's not necessarily a profit like driver in itself, but if you're earning 30 or 40% APR because you're opening up access or liquidity to a market, then it makes a lot of sense, right? Then it's like, okay, that's when people will be more inclined to supply. And so we essentially are the same exact thing. If you have $100 in Elixir, maybe it goes to 105, maybe it's 99, maybe it's whatever. It fluctuates very slightly around the amount of principal that you put in. But the goal is not to run like proprietary strategies, right? Everything's per pair. We're only ever a maker, very similar to Uniswap.
Amazing. Yeah. And I think that I think crypto users in general, right, we've become very accustomed to AMMs. It was like the first way you could truly swap tokens in a decentralized way. Amazing innovation on its own. But it's not perfect, right? Like order books have a ton of potential to like drastically decrease the amount of slippage that end users will get. So it almost feels like, or at least from our point of view, right? Like one of the main value props of Monad is that we will be able to support a central limit order book with extremely high throughput and low gas, right? And the idea is that that will become important because trading will be much better for the end user, right? Instead of $40 of gas, slamming it into 4% slippage. With an order book, you can get much more efficient, right? You'll pay a monad, under a cent of gas, hopefully into like 5 or 10 bips of slippage, depending on how much work Elixir's doing on the back end. But I almost see you guys as like, we think that we transition from the vast majority of volume being on AMMs into central limit order books. And you guys basically help that process, right? And the only way that we've seen central limit order books work in the past is with market makers doing a ton of work, right? And then getting these profitable deals on the back end. You guys are almost helping the transition from AMMs to efficient central limit order books. And then at the same time, right, decentralizing it so anyone can participate in the market making. Is that more or less correct?
Yeah, that's exactly right. I couldn't say it even better. Like, that was a perfect way of summing it up, right? I mean, the last thing that I'll mention on that note, though, is that it's interesting. We have calls nearly every day with leading AMMs, like ones that you guys like have traded on, definitely know. And what you see is that these AMMs are moving more and more towards the order book model, right? And so if you think about Uniswap V2, right, is very much you just put in two assets, that's it, right? Then you have V3, right, where you can now specify certain bands. Now you have V4, right, which have hooks, right, and allow for you essentially to place limit orders at certain points, right? And so we've seen that you're kind of moving closer and closer to that order book. And the main value unlock, right, for these AMMs is that they can allow for people to passively supply liquidity. That's like the big thing that order books don't have that AMMs have. And that's the big, like, I guess, secret weapon that AMMs have, right? It's very easy to bootstrap liquidity to long tail markets, right? If you're some tiny little coin on whatever chain, like that's like whatever, tiny little irrelevant chain, you can launch on a pool and you can have a market that people can trade against, right? So that is like very impactful. But the order book like definitely has reigned supreme, right? You see like all the largest perp dexes, all the biggest perp exchanges, all of the large centralized exchanges, they're all order books for a reason, right? And it's because, I mean, you can update orders like near zero cost, right? You can very easily like adapt. People understand like it's all via APIs, right? So the infrastructure there, you can use way faster infrastructure versus going on chain and getting MEV'd or trying to like. So there's a bunch of different reasons, but all of these AMMs are moving towards this order book model. Also because the fees, like the last thing I'll mention on that note too, is that speculation really is like one of the really big successful use cases of crypto, right? And so anything that touches speculation has made a lot of money in crypto, right? Exchanges obviously print money. You see wallets and sort of like staking providers, people who speculate and then want to lock up their coins, like those make a lot of money, right? And so you see that these exchanges themselves, the fact that Monad enables all of this, like essentially like a decentralized CLOE on chain is like, I think going to be great, obviously, for establishing Monad's like prevalence in the Web3 space. You guys are already killing it. But I think that'll be something that you guys are doing right that a lot of other chains may have missed too.
Yeah, 100%. And kind of like zooming out on the liquidity piece of things, I mean, one of the biggest complaints in crypto, or at least like hot topics, is liquidity and often the lack thereof. So curious to hear, what are some of the like biggest issues that you've encountered with liquidity in DeFi, and how is Elixir kind of poised to solve this?
Yeah. So I think the main issues, like with the liquidity specifically in DeFi, the main kind of, if you look at, there's like two sides of like the marketplace, right? There's people who want to supply liquidity and earn yield. And then there's the actual like venues themselves. The willingness for an individual LP to supply liquidity depends purely. It's like a purely profit driven kind of endeavor, right? If they want to, they have to make money while supplying liquidity. Whether through, it's usually subsidized, right, through exchanges, right? A lot of times it's through rebates or like these liquidity provider incentives. And so the main kind of detractor against that is toxic flow, right? So if you are an LP, like everyone kind of knows that if you're a passive LP in an ETH USDT pool on Uniswap V2 and you're not being incentivized, like, I mean, you're not really necessarily like a lot of times, like you're going to kind of lose money, right? And the reason for that is you're fully passive, right? If say a price of an asset is $100 everywhere, and you're in a pool where it's $98 and you supply liquidity at that $98 level, and then it gets ARB to 100, the person who loses is the LP. That's like the toxic loss, right? And so we've seen the solution to that problem comes from things like I don't know if you guys have heard of like Kyber Swaps has this new dynamic essentially like fee mechanism for LPs where you can, and you've seen it with Uniswap too, for more toxic pairs, most of the LPs are charging like a 1% fee or a 0.1% fee. The super untoxic pairs, right? So if USDT to USDC is a good example of a pair that's not very toxic. It's always at $1, right? So if you have liquidity in there, you're pretty much just always making money. There's not a lot of impermanent loss one way or another. So the fees there are really low, right? Like if you go there and you like on V3, you can do this. You can set like your own fee rate for your liquidity. You're never going to pick up any volume because if you do it at like a percent or something, because everyone's at 0.01% fees, right? So it's a kind of a free market for that. The equivalent, so now and then take like a super toxic pair. So an example is like ApeCoin to USDT. Like that's like a great example of like a super toxic pair because no one really knows how to price it. It goes crazy. There's a lot of different venues. The price movements don't start on Uniswap. They like just all get ARB to Uniswap. The actual most of the liquidity there is at like a much higher fee rate, and so that is something that has been kind of added through like Kyber swaps, like dynamic pricing. Like all these AMMs are starting to do that. The equivalent for that for order books is the spread. So that's something that has already been built in, right? Market makers in times of larger volatility will quote wider. It's the same thing with Elixir, right? It just calculates volatility over time. It's all rolling buckets, right? So it's as volatility starts ticking up, like the spreads start widening, we start quoting wider. And that's just so that the LPs don't take on more of that toxic flow. And so it's crazy. Like the whole thing is all the same. Essentially, the market dynamics are all the same. But yeah, those are some of the things that I think are really going to need to be improved on, right? Is like reducing the costs to supplying liquidity and making it more inherently profitable. And the ways that you can do that obviously are through fees and some of these other mechanisms, right? On order books, it's like making sure that you can update your orders, quote wider if you need to, because then you're essentially, you can use less. Every dollar of rewards that you pay out as the exchange will bring in more liquidity per dollar of rewards, if that makes sense, if the actual venue is more profitable to trade on. So yeah, I mean, I can talk about this for forever, but there's a lot of things there, I think, but that's like one thing that is really missing, and we're starting to see improvements on quite a bit in the space.
Yeah, I would. You can go ahead, Danny.
I was just going to say that was like a really well outlined explanation. And I think we kind of started to get into this already, but this is obviously very top of mind for us at Monad as well. Like not only having a high performance chain, but being able to actually introduce a much better user experience in DeFi than anyone has ever really seen before, especially in an EVM environment. And it seems like there's a lot of synergy between Monad and Elixir on that front. Obviously, you guys have been really day one supporters of Monad, some of the earliest builders in this ecosystem. So would love to hear kind of what led to your early excitement and your commitment to build full force on Monad.
Yeah, so I mean, you're hitting me with the easy ball questions. Yeah, we've loved working with you guys. I think you guys, I mean, it's the actual tech is obviously like quite strong. I've spent some time going through it. The increased throughput is like really nice. I don't think that's like really the main kind of, I think the main differentiator for us was the native EVM support is huge. We've already built out all of our stack, like all of our, it's not even just like the smart contracts, right? The smart contracts are a big part of it, but it's also like wiring up the APIs, the front end, being able to pull things on chain, right? Like when you start talking about these other ecosystems that aren't EVM compatible, it just makes things very difficult. It's like, look, we spent whatever $100,000 on our Trail of Bits audit for a smart, on our smart contract. Like now we have to rebuild another smart contract in Cosm Rust or something, and then we have to go and get that like audited again, and then we need to wire it up. Like there is a huge barrier that is there for projects, for teams to move over, and like I've heard it like a bunch of times from like layer ones over the years that we've worked with or that I've just like known, where they talk about how Rust is a much larger developer base and that that's kind of, they're appealing to a different crowd. I personally just like as a team that's building in this space, it's just like I understand what they're saying, but at the same time, it is a huge burden to try to like rebuild the stack, and there needs to be a really good reason to do so. And then imagine that like that's just like one for one team, right? Like we're just one team. Imagine now every team, all the 1,000 teams you talk to that would be excited to build on the ecosystem in a different language, like they're all facing that same exact problem. So you just face this, you're already facing a cold start problem as a new ecosystem, right? And then on top of that, you have this huge burden. So it's very hard, I guess, for these new chains. But for Monad, like it was really like a no-brainer. We want better throughput. We want EVM compatibility. You guys have a great community, which is, has been amazing. Like we've seen a lot of the Monad guys join our community, and they've been amazing. And so, yeah, it's just like obviously like the team is great. Like you guys are all trusted actors. So it's been it was kind of a no-brainer on our end.
Likewise, man. Well, it feels like, if one of the core value props that Bonnet hopes to bring to market is an efficient trading atmosphere powered by central limit order book, Elixir fits in pretty good there, right? Like it makes a lot of sense. So yeah, it's been awesome working with you guys as well. I have one question that's less like not technical, and then one that's a bit more technical. Hit the technical one first, right? I think that when people think about on-chain market making, one of the questions that comes to mind is, a lot of market making it's a very competitive space, right? Like whoever is, even if it's like one BIP closer to the order, right? They're the one who's going to get filled. On chain, everyone can see where everything is sitting. So I guess the question is, with on-chain market making, how does it differ from centralized market making because of the transparency? And is that net beneficial, or are there ways to combat it so that people don't see where orders are sitting? Just talking about the difference between transparent on-chain market making versus typical market making.
So it's a good question, and I don't want to talk too much about this because I have a lot of thoughts too. But the first thing that is important to note is that from a market maker's perspective, things are, if you're thinking about a CLOB that's on chain and then a CLOB that is on whatever Binance's order book, they're essentially, you get roughly the same amount of you get the same amount of information on both, with a couple exceptions. You see the order book, you see where orders are, you can query the state of the order book, and like you can then place your orders accordingly. That's kind of the same on both. Like, so there's no additional transparency when it comes to that. The additional transparency that is interesting is like, number one, leverage, right? If you could see exactly where like a lot of market makers run with high leverage, right? And that's because like, if you're getting 2% of a token project supply to have 150K on the books, right? And you can do that over and over and over again, and you just need liquidity. That's your only constraint. Like, yeah, you're going to run high leverage, right? Or if you're one of these other firms that you have like a really good strategy, right? And you're collecting a lot of incentives, a lot of times you're going to lever up. And if people can see, okay, this guy has this like level, right? Where if this price goes to this certain asset, then they're going to get liquidated. That's definitely valuable info. That's like really the main kind of, I would say, difference there. Obviously with like the there's things where like the actual orders, I mean, and this is all like for API based exchanges. This doesn't talk about like, this is assuming that the on-chain central limit order book has APIs. If you're broadcasting transactions on chain, it's a whole other animal, because then you have to deal with MEV, you have to deal with like the way the blocks are built, with like which kind of the way in which they're actually executed, right? And so that's why for us, our recommendation for teams building a central limit order book is we actually recommend not building it on chain. We recommend building it off chain that settles on chain, right? So you see this already with like pretty much all the large dexes. So for example, I mean, just going down the list, right? DYDX has this, Vertex, RabbitX, all of these guys, right? Avo, Hyperliquid, they all have off-chain modules that settle on chain. And that's important because number one, you don't want users to pay gas generally, like especially on like a lot of these other chains, right? Up to update orders, because then what market makers have to do to compensate is they have to update less frequently, right? So Elixir updates once every like less than a second. So it takes us like, I mean, in HFT land, that's like a long while, but essentially every additional second of latency, you have to quote wider, right? So we factor that in. So we're not always top of book, like that's not our goal, right? Like we're not trying to run super proprietary strategies and always be top of book and compete in that regard. We want to be this trustless, like liquidity backbone that these exchanges can lean on, right? And incentivize that trustlessly, right? So that's like the first piece. So, but yeah, there's actually not that much, as long as you have APIs, that there's not that much additionally that's revealed there. But yeah, the main differences is, okay, like imagine you have a fully on-chain CLOB. There's a couple of them that are like, and you'll see the spreads are noticeably wider than like even on like really fast chains. There's chains like Solana, right? Like it costs whatever, like a fraction of a penny to update there, but you still see that like the leading order books there still have wider spreads and not the best execution. And that will just be a fundamental thing that they live with, because you can't have like a 1 penny spread and update like 10 times a second or 30 times a second, which most HFT firms do with a fully on-chain order book a lot of times. So that's why we generally recommend not doing that. And then from there, there's the question of like, okay, well, if you're a fully decentralized protocol, you kind of alluded to like, how does that work? Like, can people kind of like game orders, I guess? So that's actually something that so the first thing I guess is worth mentioning on this point. And I know that I'm kind of going on for a while, but there's a lot of stuff here to go through. If you are an LP and an AMM, like a Uniswap AMM, everyone knows where your orders are, right? And you're an LP at a pool at $96 and it's 100 everywhere else, right? If you're different from the fair market price, you should expect to get arbed. That's like the same thing in order books, right? If you have a bad bid, right, we quote below the mid price and then above the mid price, like every other market maker. If someone thinks they can make a profitable arb, they're likely to do that, right? So that's why you have that bid-ask spread. That being said, we actually have provable randomness within our protocol. And without going too far into it, we essentially have a variable that fluctuates from like 0 to 1, right? This is actually in a Velanita. This variable, I mean, Velanita's been around since 2008, before Bitcoin, earlier in the year. And when it's at 1, the algorithm is trying to keep the books at 50-50. And when it's at 0, that is disregarded and it's just optimizing for P&L, right? So so people don't really know what to do with that variable in crypto. Some set it at 1, some set it at 0, some like change it. We have a random walk between 0 and 1 that's within our enclaves. And so you can always go back and verify that the protocol is acting honestly. And at that point in time, you can verify that it's acting honestly, but you can never predict in the future what our actual orders are going to be on the actual exchange. So we have that as an additional mechanism. 1 out of every 5 orders randomly won't make its way to the exchange, right? So if you try to build a bot to trade against us, right, you'll eat a bunch of slippage. So we just make it very EV negative to try to trade against us. So yeah, that's the second point there.
That's smart. So to zoom in on one thing that you just mentioned as well, right? A fully on-chain limit order book versus an off-chain limit order book that is settling on-chain. it's something that, we have thought a lot about in terms of finding like what is the best UX on Monad and why will it be that. So the main advantage for an off-chain limit order book that's settling on-chain is that it's much faster and cheaper to quote price off-chain. Is that like truly that's the main factor?
That is the main factor, but there are a lot of other edge cases. Okay, imagine this. Like you see an order that is like, okay, the exchange wants to close a person's short. They hit the liquidation level and they want to close it. Parties could spam transactions on chain to try to just fill blocks so that like that liquidation can't go through. There's things like that where it's like, okay, now a user has a large, there's like weird manipulation avenues that happen if all orders are fully on chain. So that's like something to think about too, is that like, okay, if everything is on chain, you can now manipulate other people's trading via like trying to attack the chain or these other weird, use cases. And then but the main thing is like the actual speed and the cost for market makers. If it's going to cost, so Elixir, it's like, imagine there's a DEX on Solana or whatever. They have 50 pairs, right? We have 5 orders, let's just say 5 orders as bids, 5 as asks per pair, and we update all of those once a second. Even if it's like 1/10 of a penny, it generally will cost roughly like $1,000 a day or something if we're updating once a second. So what happens is then it's like, okay, well, some of these pairs aren't all that active. So we will only update our orders when there has been a trade on that pair, right? The order book changes, right? So then what happens is you have to quote wider because you're updating way less frequently now. And so the exchanges just then have like wider books because every market maker has the same exact like thought process around that. So that is the main concern, but there are weird edge cases.
Gotcha. Yeah. Intuitively, right, it makes a lot of sense. Like if you tried to build a central limit order book fully on chain right now and like even on an L2, right? If you have to pay 20 cents to update and there's 10 of them per pair that you're updating constantly, way too expensive. So if you can get the throughput high enough and the total gas low enough, or the higher throughput and the lower gas that you get to, the tighter the spread is going to be because that's where it becomes profitable to actually market make these markets.
Exactly. And like the last thing to note is that all of these like different exchanges have kind of realized that. I think a lot of them started like fully on chain and then built like kind of like a sequencer that then settles on chain, and it's all for the same reason, right? So like, but this isn't really like too big of a concern. With like Vertex Fusion, there's no gas, right? Vertex Fusion, RabbitX Fusion, Bluefin Nexus, Hyperliquid Aqua, which we're going to be announcing soon. All of these, they all operate. We update more than once a second. We're updating. So every 0.9 seconds, we're updating, and that all happens fully gaslessly. But if the second you add gas to it, we're just like, okay, how are we dealing with that? And I guess the one example there, so one of them, so NFT Perp is launching NFT Perp Turbine, and it's their integration of Elixir. They built that out for us, and we're going to be announcing that one later this week, and that'll probably go live in the next month or so. That is fully on chain. So there's essentially now it's like, okay, well, we have it's pretty cheap to update orders, but because it's an NFT based perp exchange, there's not as much activity. So it's like, okay, well, we can update, we just only update when there's an order. And sometimes in these pairs, there's not an order for like 5 or 10 minutes. So then it's like a lot more reasonable. But we do like on those pairs where like it'll be like a much wider spread. Those are also very toxic assets a lot of times, like NFTs. So that's, they like, I've thought about that though. And so the taker fees are quite expensive and the makers get big rebates. So yeah, it's all just like it's super cool to kind of see just across the space, but those are the main considerations.
Yeah, makes complete sense. And I think like kind of zooming out on this a little bit more, the listeners that we have on the pipeline are kind of all over the map. We have people that are super tech savvy, super deep traders. And then we also have a lot of folks as well that are kind of just getting into crypto, maybe trading a little bit here and there and trying to figure out how they can trade better at the end of the day and make some money. But for those types of folks, how would you describe the impact of an on-chain CLOB for the user experience? What can they expect that's going to improve that UX as opposed to what they're accustomed to dealing with today?
Yeah, I think the main things that, and just to make sure I have the question down right. So the question is like, what are some benefits of using an on-chain CLOB versus kind of like a centralized exchange?
Right, exactly. Or any other alternative. And specifically for people that are like just kind of foraying into crypto, they're not going to necessarily trade a ton of volume or even necessarily a ton of like different orders.
Yeah, so I think the main benefits obviously I mean, number one is custody, right? You custody your assets at all times. That's like the main, like, and it's a huge benefit, right? Like, I don't know. I mean, I don't know about you guys, but when I do have to trade on a centralized exchange, I send funds there, I do my trades, and then I withdraw. Like, I never have funds on the exchange, and it's because like, like just if you're in the space for a long time, like I missed the Cryptopia hack, or by like I don't even know, it was like 2 hours. I withdrew, and then it got hacked, and I was like, wow, like that was like a close call, right? So um, that is like the biggest benefit. You also know that like the exchange itself is not trading against you, which is really big, right? And then you have parties like Elixir, right, which will actually get deeper liquidity, right? Because we're trying to stay away actually on the Elixir side from all the market making super deep terms. Like we allow for people to passively supply liquidity to order book pairs and earn rewards, right? And it's fully trustless. It's exactly how your liquidity is going to be provisioned. That was like that's the inspiration for Elixir was like you see the like FTX Alameda side of things, right? Where if you have an exchange with a built-in market maker, what they can do, I mean, it's in their best interest. They see their users have, oh wow, well, like we have this big pool that we trade to provide liquidity for users, and I see this one user has a liquidation level $5 lower on Solana, and if we liquidate him and wick the price back up, we can pretty much take like $1 million of his money, right? So you won't have that, right? In that regard, because everything's fully on chain. You can see the code of the exchange, like stuff like that would be very quickly revealed. So it is a like definitely the like I am very bullish for decentralized exchanges. Like it is for sure the future, and I think the value add of them is like very clear. And we're starting to see. I mean, there's a lot of like these other dexes that are spinning up that have like on-chain custody with like a centralized component for the matching and things like that. Like we're seeing a lot of hybrid forms too, but yeah, there's a lot of benefits just across the board to having a on-chain CLOB, and then especially if it was on like Monad too, like it'd be very easy. Like especially one of these CLOBs, they do like they can enable like one-click trading. They issue a signature, right, which gives them the approvals, and then they can just press buy and sell, and they can trade without having to do like a bunch of approvals every single time, right? So things like that, I think, are really impactful, and I think it'll just be you can have your funds in your MetaMask like you're used to in your ledger, right, and you can go on like and just like whatever your funds are on Monad in a pool, you can withdraw it, make a swap very easily, and like you never have to like trust another party to hold on to your money for. I think so. There's a lot of benefits there.
One thing I'm curious about, right? My first 3 years professionally in crypto, I was fully on the venture side, right? At CMS Holdings. Shout out CMS, one of the best companies that I think probably exists in the world. Um, but transitioned to the builder side last June, and it kind of unlocked this new perspective on crypto, right? Like being on a team that's actually building a product that's trying to move the entire crypto space forward. And there's a whole host of other challenges that come with that, right? Like being like this as well as anyone, right? Being a founder of a project that's trying to create something that's net new to crypto and hopefully moves the space forward and makes it more efficient. Um, what are some of the challenges that you guys have faced, more recently or kind of over the entire lifespan of Elixir so far?
Yeah. Well, I think I mean, every project has kind of its own unique set of challenges. We were really lucky to get some really strong people from the get-go. Hiring is generally like the biggest one that most projects in crypto face, right? You need to get like top quality guys that are on your team, right? And that can be trusted. And so, I mean, our biggest expense obviously is our people, and that's like by design, right? We want like Solidity engineers who are all in, right? Who are like, I mean, we're building a new primitive similar to like how you guys are too, and building things that are like completely brand new like that. I mean, a lot of what we were building, like people, like because it's so new, people, it's like hard to put that in a box. It's like, okay, so you guys are like a modular DPoS network that comes to consensus, but it allows for it can be like white label integrated by all of these exchanges, right? And I think we've really kind of were able to solidify a lot of that through this new branding, right? So all of these different exchanges, it was like when we first launched with Vertex, it was very much like, I mean, it was like supply via Elixir, right? Everything was like via Elixir. There's logos everywhere. It's just like kind of messy. Like we were like, look, we don't want to like have to ask you guys to put our logo everywhere. It's like kind of weird. There's like it's kind of internal, like we don't want to make it feel like it's like a billboard for Elixir, like putting like ads everywhere. So we landed on having Vertex Fusion, which was like this white label product. Vertex owns it. It's a key feature of their exchange that they offer to their end users. There's a big supply button in the flow. You could press it, and then users could just supply liquidity to that pair and earn 20 or 25% APY, right? And they can earn that on their stables, right? So it's a great source of yield. And then once we landed on that, all of the others were like, yeah, that's like exactly the way we want to frame it as well, right? We want to have this as our own product, like our own core feature of our exchange that we offer to end users to better like bootstrap liquidity to our order books. And so once we had that, it was really just kind of it was really off to the races. So yeah, I think like really the biggest challenges outside of those though, I mean, so on the BD side, like we've been really blessed. We pretty much have like, I mean, yeah, we have great partners and like they see the issue. They've all seen this. A lot of times they've tried to build little things to try to like solve this issue themselves. But I think we're really good. I think we have one of the strongest BD teams. And like just like the traction that we have, I think rivals a lot of that of like a lot of the biggest top 100 layer ones that are out there, just in terms of like the amount of adoption that we already have. But so we're really blessed on that side. Outside of like hiring great people, which we've done, you generally have to like a lot of times you have to pay a headhunter like a bunch of money to get those people, right, or to get access to those people when you're first starting out. So that was something that we did to find like our CTO, right? And he's amazing. Like he was like one of the best hires. He's just like absolute killer. But as you get larger, you start to fix that, right? Because people are reaching out to you all the time. You have like, we make a tweet about like looking for a role and we get like a ton of great candidates. So I would say the last kind of big thing that most crypto projects are dealing with is regulation, right? So being in New York City, right, like having a team, right, that has a U.S. presence, it's very much like one of the large, like you want to make sure you're obviously compliant, right? And we're thinking about we're going to be rolling out the Elixir Apothecary. It's coming soon. Can't say what it is, but yeah, it'll be something that like we'll get a lot of more people engaged, and we just want to make sure we're doing everything in a way that we're not coming in the crosshairs. Although we are like we're not building anything that's really too sketchy there. It's still just like something to note. Like there's a lot of big US based projects that like end up running into the crosshairs of a lot of these organizations. So a lot of our spend is making sure we're fully compliant.
Yeah, I think anyone who's worked in crypto specifically on like the product side of things, or even has been in the space for a while is kind of familiar that, with every success, there's like 3 more challenges that pop up. And that's kind of like, yeah, it's tough to navigate, but at the same time, it's also kind of like an inspiring thing that you have new challenges to tackle and every day is different. And that's only magnified when you have a strong community behind you, as Elixir and Monad both do. And the growth for both communities has been really like nothing short of insane, honestly, over this past year, watching people flood in to support, create content, create art, branding. And that's obviously a really key component for any startup in the crypto space. But in your words, in your experience, what is the impact of seeing that strong community grow alongside the product for you guys?
Yeah, I mean, I think it's obviously communities are vitally important, and I think you guys realize this as well. Just like with the amount that you guys focus on it too, it's vitally important. I think it's people are starting to understand like the need that Elixir is filling, and like our position within that stack is really kind of, I think, I mean, we really have when we first went and we started talking to these different exchanges, the thought was we want to solidify this like moat against because we're building something 0 to 1. We want to be the one that goes out and like lands all of these different like exchanges, right? So that like we can be the one that actually unlocks this value for them. The Now that we kind of have that, there's like kind of this public perception that is like still kind of catching up, and I think that is like really the biggest and I think like most exciting thing, right? Because I mean, Elixir doesn't work without like its community. Our community is our biggest asset. Um, and so it's like, I mean, that's like, you can have the best tech in the world, but if you don't have anyone that recognizes it or uses it, it doesn't even really matter. And so a lot of our focus to date has been like B2B to C, right? Where you get these exchanges, like this infrastructure that is like trustless and that they are putting within, like they essentially integrate and build on top to essentially push their users, hey, you guys can now supply to the order books. So a lot of our community, a lot of the parties who are supplying on Vertex don't have no idea what Elixir is, right? Or like they see what it is in the interface and they press it and they learn about it. But I think now that we've started to kind of gain that momentum ourselves, it's great. And just being able to be, it's also just a huge asset to future exchanges, right? That are now like going to be pushing. The apothecary, like, which you obviously still can't reveal very much around. We have like really big guys that are going to be like pushing that as well, right? So guys like Arthur Hayes, all these other like large names, it'll be all over everyone's Twitter feeds, right? And all of this is just ramping up to a mainnet launch in like June, July. And then that way we'll be able to get obviously like a decentralized network, right? Like an actual, like, we have all these validators because we have a test net that's live and we have I think we have like 13,000 validators that are running right now. But we obviously want the real, like right now we're just essentially running a trusted version of that, right? Like the foundation is running those validators for Vertex Fusion and these other implementations. So we want to actually get like a large set of people who are running these validators and participating in consensus. So yeah, it's like, there's a bunch of different value adds to having a large community.
Amazing. Thank you, Phil. Well, I know we're coming up on time here. One of the last questions that we like to ask is the final alpha, taken unapologetically directly from our favorite podcast, Up Only. Ledger and Kobe used to have it as their final question, but essentially the gist is, any advice or words of wisdom that you've picked up. It doesn't have to be around crypto or trading, but it certainly can be. Essentially anything that you think is important, kind of a fundamental principle that you've picked up along the ways as a trader, as a founder, right? As someone who's building a very cool product, something that the listeners can take away, bite-sized piece of information that they can glean from the pod that you would like to drop to any of the listeners here.
Well, I think I could go the sappy route with just like cliche stuff that a lot of people have heard. I think like a lot of the Elixir specific alpha is going to become like, I think pretty clear to everyone in the next couple of weeks when we make a lot of these big announcements, and things are going to really start heating up on that side. So I don't think I'll go too much into that. I'd say like, I'll go the sappy route. I do think that like, if you are planning on building stuff, like Elixir was built for over a year with people not even really understanding the problem we're trying to solve. And like, so I think if I had to give any advice, like along the journey, it's really take on early stage risk and like just own it. And then just kind of be ruthless in your pursuit of it. Right. Like, and it doesn't need to be from like a trading side. Like I'm not saying go 100x leverage, but like you're not going to make it unless you like really kind of like, you can't make it if you're just kind of like going along and playing by the rules or whatever. If you have like a really big idea, like be ruthless in your pursuit of it and just like don't give up when you're pursuing it, and like it will come to life. So We've been seeing that with Elixir, right? Like I was like, look, it's crazy that this doesn't exist. And like, yeah, it's, I mean, every founder has the same story, right? I'm sure like Keone has the same with like founding Monad and like, yeah, it's just, you get a bunch of like, oh, like, why do we need another like layer, whatever, layer one or layer two? Like, it's just, you'll get a lot of kind of naysayers, but it's at the end of the day, like if you take on that risk and you put your head down, you'll be okay.
That's huge. That's honestly banger alpha right there, because I think that's like why we're all in this space to a degree anyways. Like it's exciting to pursue these problems and to be forward thinking and to actually try and push the space forward, and that's certainly exactly what Elixir is poised to do. That's what we're trying to do here at Monad as well. So really excited about the synergy between both projects here. Excited about 2024. Excited to hear some of these announcements in the coming weeks, and really appreciate you joining us today, Phil.
Appreciate it. Thanks guys for having me. And yeah, I look forward to chatting with you more and collaborating more in the future.
Awesome.
Absolutely.
Thank you, Phil. And thank you,
Let's run it
Andy.
back soon.
Let's do it.
See you guys.